So I try and look at all deals. Are we going to buy this one and flip it? Or are we just going to get it under contract and assign our contract to a cash buyer and make a quick assignment fee? Or am I going to buy this one at, 40,000 and seller finance it for 90,000? We try and do a mixture. That way we got some payments coming in over here. We do a quick assignment fee over here, quick flip over here. And then it's three different streams of income, really. So I wanted my income to stay the same and or increase by doing the seller financing note.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Brent Bowers is an investor and coach with a focus on buying and selling vacant land. In case you didn't catch Brent's first episode with me, it was on December 11th, 2020. He took a gamble on me with an early podcast, and that was episode what? What was that, Brian? Or Brent? Number 12? Episode
number 12. And that's
12.
my lucky number, actually.
Oh, well, good. Well, hey, man, look at that. I appreciate it. Brent, welcome back to the show. There are 3 questions I ask every guest who comes on the show, and you probably answered this 2 years and some change ago, but where did you start? Where are you now? How did you get there? And you got to tell me in 90 seconds.
All right. So I started in 2007 as a real estate agent, bought that first rental property, got my teeth kicked in 2008. I was a big quitter, threw in the towel, went towards an easier career path, which was the military. Ultimately, I wanted to go back to school, start over. 2013, the military pulls me out of my second combat deployment. I start house hacking. Then I start wholesaling houses to pay for college courses because I chose a private school for some reason. It was really expensive, and met the woman of my dreams in 2015. That's my second marriage. The first one didn't work out because I was always gone in the military. We had a baby in 2016, and then I had to find answers. I had to find a way to start producing income outside of the military so I could put in my resignation and be, a better father, stay-at-home father, work from home, see my wife, every night type thing. And that's where my land investing business came into play.
That's awesome. Absolutely awesome. Yeah. If you want to go back and listen to that first episode, I still remember it. I mean, I don't know, we've had 800 almost episodes at this point, and I still remember your story when you shared with me, on that first episode of how you got your first deal done. And that one stuck out as like one of those like almost improbable stories. You're like, wait, you did what? And that actually worked out and you made a pile of money on it. That's awesome. So tell me, where's your business right now? Like what's your, I know you set out those big goals of what you want to do for your family, but what are you focused on at the moment as it pertains to vacant land?
Yeah. Right now, I am doing a few less land deals than I have done over the last several years because I've been, scaling your real estate business, scaling your commercial real estate business. I love this podcast because all I've thought for the past several years was scale. And it's turned into some dangerous things. And, I feel like as visionaries, as entrepreneurs, as business people, it's not the real estate. It's really the business. Right. And the business is buying and selling vacant raw land. Well, I did not get into land investing to strike it rich. I really just got into it to cover my monthly expenses. I had it simple. I just wanted to make like 10 grand a month. And really my bills were only $4,500 a month. So when you do that, you're financially free. And then the time freedom from getting these monthly payments from our land, we're up to like 79 parcels that we receive income on. I'm paid multiple times a day from land. I think we're right at this month, or at last month, actually, we're middle of this month. We collected roughly 18 grand in payments. This month, we should be around $21,000 a month in payments. And then we'll flip some here and there or assign the contract and make some quick cash to, build up our buy pot again, to buy more land to sell our finance on. But I'm pretty happy with that. I've completely gotten out of the house business. I only have 2 more dogs to take out back and shoot. I got stuck with, we bought like 7 properties, 7 houses last December because I was feeding my ego. I thought it was cool to flip houses virtually. And I was like, oh yeah, we could do all of it. So now I'm kind of like focusing on profit first. Mike McAllowitz wrote an amazing book, and less is more, getting rid of things we don't need. Like I had like 8 subscriptions to DocuSign. I had 8 users, and some of those people weren't even with me anymore. So little things like that. So that's kind of where I'm at. We're in kind of tighten our belt mode, be more profitable, because it's not about more revenue. It's about keeping more of it in the bank account.
Yeah, you're the second person today that has mentioned Profit First. So it sounds like that's a book that I'll need to digest here on my, oh, there it is, even a copy of it right there. So if you're watching this on YouTube, now you know how to spell the author's last name, because I wouldn't have been able even to pronounce that. Not that smart.
I don't know how to spell it either. I don't care. He said some great thing. His name is Mike. I don't know what his last name is. Nah, just kidding. Mike Michalowicz.
Mike Michalowicz. There it is. So you're scaling back what you're buying on the land side of things. Is that right?
Yes. And what I mean by that is I keep looking over at my board of my land deals, and I'm doing less land deals, but bigger profit margin on the land deals. And some of these, I'm even bringing partners in so they can pay for it, or lenders. Like we just did I got another board over here. I broke down a deal the other day. We bought the land for 40. It was worth 90. I borrowed the 40 from my mother-in-law at 9% interest. So she's pretty happy. Her money's working for her. But I had a buyer the next day. I literally had the buyer lined up before I bought the land. He put $5,000 down, and we're financing $85,000 for him at 9% interest. Usually I go for 12, but I like to shoot for the moon and hit the light pole sometimes. So we got 9% interest on 85 grand, and mother-in-law will be paid off in 5 years. This guy's going to pay off in 13 and a half years. So we should make a little over 100 grand on that deal that took none of my own money out of my pocket, and it's helped my mother-in-law as well.
That is fantastic. And I forgot here to actually mention, I left Clay completely hanging out in the dark, and we did the introduction here. For those of you who are listening, I've got Clay, who is our director of acquisitions here with the Brick and Investment Group, on the call with us as well, making a guest appearance here on the show. So welcome, Clay. Thanks again for coming on.
Thanks for having me. Glad to be here.
Absolutely. I forgot to even give you an intro. It sounded like maybe you had a question and want to jump in.
Yeah, Brent, I was curious, and a lot of the land investing, heard a lot about people just flipping. They just buy for low, sell high, get out quick. Seems like you've really built your business on a lot of the leasing. Why is it that you've chosen to go with that strategy?
Yeah, I coach a lot of people in the Land Sharks community, and several of them have made a tremendous amount more money than I have. I mean, I guys in the millions of dollars of range because they bought, flip. And a lot of this, they're using their own money. Let me tell you what's dangerous about that is I talked to Sam already about that first land deal I bought for $285, not buildable land. The second one was not accessible because it was landlocked. So I took that first 285 and turned it into $5,000. Then I took the next one and turned that one into an additional $5,000. And then that money snowballs. And then you start buying these parcels for $10,000 and flipping them for 20. Before you know it, you got $1 million of your own cash that you created out of thin air, and you're flipping. And then eventually someone turns off the music and you're missing a seat. Like you have nowhere to sit. You lost it, and your money might be tied up into one parcel of land, and then your income dries up, and then now you no longer have the money to send more letters to landowners. So I tried to do it's almost like how a quarterback takes the first, the second, the third look, what receiver's open, or am I going to run with it? So I try and look at all deals. Are we going to buy this one and flip it, or are we just going to get it under contract and assign our contract to a cash buyer and make a quick assignment fee? Or am I going to buy this one at, $40,000 and seller finance it for $90,000? We try and do a mixture. That way we got some payments coming in over here. We do a quick assignment fee over here, quick flip over here. And then it's 3 different streams of income, really. So I wanted my income to stay the same and or increase by doing the seller financing note.
When you say when the music stops, what are some things on a macroeconomic kind of viewpoint that you think could or have happened that would make the music stop as it pertains to buying and investing in vacant?
Now, so here's the thing. My real estate career was started with fear and scarcity in 2007. I bought that first property in 2007, and it took me until about 2020 to finally be worth what I paid for it. Into this business as nervous and like, how can I avoid happening again what happened to me in 2008? I literally had to, move in with my in-laws, couldn't pay my bills. So at the end of the day, as far as the music stopping, right now, we're seeing houses sit on the market longer than usual. We have seen interest rates go up to, 7%. And don't quote me on that. I'm not tracking prime. I don't really care because I'm not buying a house. Well, I do kind of care actually, because I have one for sale. And every time it goes up by a half basis point, you take 1 million buyers out of the market. That's huge. So builders' confidence is a little low right now. And I'm seeing deals I did not see 3 months ago because D.R. Horton has backed out of earnest money deposits. So that's kind of what I say with the music stopping. When the real estate market slows down, is land still selling? Yes, but it's taking a little longer to sell it. And I want to be the cheapest guy on the market, not the one that's like priced right or priced high. Because here's the thing, it's not like, honey, that one's a 3-bedroom, 2-bath house. It's got a pool. This one's a 3-bedroom, 2-bath house, and it's got granite. No, that 1 acre lot's 30,000. That 1 acre lot's 24,000. Let's go with the cheaper one. It's dirt and dirt. Who cares? So that's kind of what I mean by the music stop. When things slow down, I still want that income coming in.
That makes a lot of sense. And yeah, your point there I think is valid. And when you're comparing an acre to an acre, assuming there's no other, other features to it, it's like, well, if it's a buildable lot, assuming you're buying those types of assets, and that becomes a far less attractive buy when one is 20% less than the other. So that's really, really interesting. Let's talk a little bit maybe about practical steps. Like, what would you tell somebody today? If I came to you and I said, Brent, I need some practical how to get her done steps today to go out and start doing my first land deals. What would you say those are?
Let's talk about the get her done now, like the steps to take now. So I recommend starting within kind of your own backyard if possible. And it doesn't have to be like, right in your backyard, but about a 2 to 2.5 hour time radius to where you can drive to that land on a weekend. That's how I started. The first one was 45 minutes away. The second one was an hour and a half away. And they kind of started getting further and further away because I was kind of really just finding my groove. A lot of this was done by making a lot of mistakes very quickly. And then the seller financing bailed me out of a lot of mistakes that I made. And we could talk about those. But I recommend kind of starting within about a 2.5 hour radius of where you currently live. So let's just say you live in Orlando, Florida. Let's go to Redfin and let's go to Orlando, Florida. And you put in Orlando, Florida in Redfin. And then I want you to go to filters. And then I want you to filter out to where you only see the solds. And then you're going to scroll down a little bit on Redfin and you want to click land, select the land only, and then scroll down a little bit more and you want to see sold within the last 3 months. I'm really only trying to go 3 months out right now. And now one more step, I'm going to go and exit out of Orlando. I want to see the map. I want Orlando to go away, that little etch of Orlando. And I want to see kind of what's going on around there. And then I'm going to zoom out. And really what I'm looking for, if you're looking on Redfin, you're looking for the red dots that have sold. If you're looking on Zillow, it'll be yellow dot. So really I'm looking for demand. I want to see where the demand is happening. And then I'll play around a little bit. Then I'll do maybe 1 month. Then I'll maybe do 7 days. I'm really looking for cluster patterns. Like when you're shooting your gun at the bullseye or the target or the darts in the bar, basically you want to hit the red bullseye. I'm looking for a bunch of dots together and I'm going to click on every single one of those dots and I'm going to look at 3 things. And you can do this with an Excel spreadsheet or just a legal pad. I want to look at the price it sold for, how many acres or how many square foot. And I'm going to put those two numbers in the spreadsheet. So I'm going to divide price by acres or price by square foot. And I'm going to see how much it sold for by the square foot or by the acre. And then the third thing I want to see, I'm going to scroll down a little bit when I click on those individual parcels and I want to see who listed it and who bought it. Who it was bought by. That's the listing agent and the buyer's agent, because that's going to tell me the land specialist realtors in those areas. And if I see a pattern, Sam Wilson or Clay is the one guy selling all the land in this area, that's my new best friend because he's going to know those areas way better than I am. And now I know what the price is going for. I also see what size parcels in demand. And now I can go to a list provider like ListSource or PropStream or whatever you use and go and draw a map around that area that's selling. I'm doing micro by the neighborhood and I know what it's going for by the square foot. So now I'm going to pull lists of all those people that own 12,000 square foot lot, because those are the ones that are selling the most. And I'm going to mail those people a very specific purchase agreement, or we call it LOLs, land offer letters. I don't know if we talked about this in the last one, Sam, but they get a purchase agreement in the mail at 68 cents on the dollar for what that land's worth. So if it's selling for $100 a square foot, they're getting an offer of $68 a square foot, and they can sign it and send it back, or they can just ignore it. There's no negotiation. Those are the steps to take to go out and buy a land deal.
Man, that's awesome. That's very, very practical step.
Brent, I'm curious when you're mentioning that, kind of my first thought is when you're looking at an area, how many solds do you need to see, or how many amount of look for? Is there a certain number, or how is it that you guys kind of gauge that criteria?
Yeah, I try not to base too much off of that. I really want to just, if I'm seeing solds, that tells me there's demand. If I can see a pattern, I can see what the price per square foot or the price per acre, I will go in and mail it, because the best way to do it is to go fishing. My son, my 7-year-old son, was fishing pretty much all day Sunday. He was so upset because grandpa was catching fish, his cousin was catching fish, and they're all using the same lure that they had just purchased the day before. And he's like, I didn't catch any. Like, he was just complaining like 7-year-old boys do. And I was like, well, go back up there and give it another try. And he fished for another hour, and he finally caught a fish. And it was super small. I was like, go throw him back. He goes, no, I want to eat it. Like, he worked so hard to catch that fish. He was determined to eat it. So the same thing with testing out these markets. By actually mailing landowners, you have to speak to landowners to know if a market's good. But you can kind of go further and kind of do a little bit more research by calling that land specialist realtor. And here's another step. You can actually look and see what's listed. So if you see that 10 have sold in the last 3 months and there's only 8 on the market, that's a pretty good indicator that there's more demand than supply. You really just have to list your parcel when you get it under contract just a little bit less than the rest of them. So I don't go too far into that. I just want to see demand. I keep it super simple.
That is very, very simple. I love the basic steps here that you've taken on this. And there's in my confused mind, which is more often the case than not, there's so many nuances to this. I mean, you're talking about maybe doing, if I'm even using the correct term, because I don't know anything about land. But what I'm hearing you invest in is maybe infill lots. Is that the right term? Versus large parcels? I mean, you can do parcels, you can do rural land, you can do infill lots, there's 1,000 ways to splice and dice this. What's a great way, or maybe is there one particular one that you would recommend to somebody starting out?
I like staying under 10 acres just because it's easy peasy, lemon squeezy. I've went and bought larger parcels that we've subdivided. That just takes longer. Then you're dealing with wetland studies. If you're in Florida, you got to survey it. You got to get it approved by the county. And then sometimes you have to have a public hearing. And, if you're in Colorado, like, are you going to be allowed to get water if you take it below 35 acres? So I really kind of focus on the stuff that's under 10 acres. In some areas, we do 35 acre parcels and 40 acre parcels, but the majority of the 600 parcels I've bought and sold have been under 10 acres.
That's fantastic. That's very, very, very helpful. Clay, as you dig into, potentially acquiring land, what are some things maybe that come to your mind, that you could ask Brent?
Yeah, Brent, I'm curious, when you were starting out with land, I know you mentioned that first deal you had. And I'm curious, who was the first person that you hired when you realized, as you're scaling a business? Sometimes Sam and I have talked, but often the bottleneck is ourselves. What was the first position that you hired to really allow yourself to continue to grow and build?
Yeah, those are words of wisdom, Clay. We are always the bottleneck as the business owner. It's either for our intelligence or what we're willing to take on as risk. We are always the bottleneck. And sometimes it's our spouse. No, I'm just kidding. Which is true, actually. I shouldn't say I'm kidding. But the first hire that I hired, it was a virtual assistant out of the Philippines. And I was mailing what I thought was a tax delinquent list. Another mistake I made. I thought it was a tax delinquent list where people weren't paying their back taxes on properties. It was actually the county held tax lien list. The county treasurer sent me that list because she thought I was going to pay those back taxes. As many times as I told her, I'm like, I'm not trying to pay back taxes. I'm trying to reach out to these owners to buy the land and I'll get the back taxes caught up. But she wasn't listening. I had to go in there multiple times. And then finally I brought donuts and she was listening as she was chewing. I was like, here's what I want. Funny joke, but it's true. Anyhow, so that hire was a virtual assistant that I paid $5 an hour to go through and look at these schedule numbers. They're also, basically it's assessor's parcel number, APN is what the Colorado calls schedule numbers, basically. So Malika would put the schedule number into the county assessor website and then figure out, okay, Sam Wilson owns this property. It's a single family residence. Okay, we don't want that one. All right, Clay owns this parcel and it's actually a piece of land. Here's the address and then here's the mailing address. So she did that. She scrubbed that list and it took her hour or days actually to do that. And then the second hire was an acquisition manager to answer the phone because I was working my Army officer job. I didn't have time. I had to do this immediately. I would mail letters, and then I'd go out to the field, and we'd have to leave our cell phone behind at the rear. We call it the rear, basically in garrison, because I was preparing for combat deployment number 3. So it was really, I had to hire people because when I would leave, there was no more business. It stopped.
Wow. Yeah, that's a lot of really insightful color there that you give, as to how to effectively scale and build a team. I hate to say it here, Brent, but we are actually at the end of our time. This goes by so fast. And as always, learned so much from you guys. It's been 2 years and 2 months since the last time you came on the show, and certainly appreciate you coming here back on again today. Let's talk really maybe real quickly. Is there any other major mistake you could help us avoid or help your listeners avoid as they think about scaling their land business?
Yeah, it took me years to realize that there are land specialist realtors out there, the guys that are familiar with A Street, B Street, C Street. And oh, by the way, D Street does not have city sewer and city water. Those lots only go for $17,000 when A, B, and C have sewer and city water, and those go for like $37,000, like twice the amount of money. So you need to know that and know your comps. So find that land specialist realtor by copying and pasting them into a Word doc on the parcels that have sold. Maybe you're not seeing a pattern there, then go to the listed parcels and see if you can see a pattern there, because those realtors are worth their weight in gold.
Fantastic. Brent, thank you again for coming on today. Certainly appreciate it. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Yeah, if you're looking for someone to hold your hand and help you build your land investing business, then head on over to thelandsharks.com, fill out the application, schedule a call. I'd be honored to bring you into the community.
Fantastic. Thelandsharks.com. We'll make sure we include that there in the show notes. Brent, thank you again. Have a great rest of your day.
God bless.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.